Steve, where are you on tech? Was Netflix a warning shot to investors that have been in these beloved hot stocks with great expectations and crowded positions?
Yes, I do. And I don't want to make too much of it because Netflix is somewhat idiosyncratic. But all these stocks are priced for perfection. And so if you get earnings that are not perfect, the market's going to penalize you. And now that means you're still up a long way, depending on when you put the position on. But if you're getting into a new position now, or you think you're a little overweighted, earnings season tends to be asymmetric. They tend to penalize companies more than they reward them on a miss versus a beat. And so, yeah, Netflix probably should be kind of a little bit of a wake-up call saying, am I overexposed in some of these names? I could be susceptible because they're priced so aggressively.
But is that just a short-term, as Stephanie Link put it earlier, tactical trade that it just ran up too fast, too far, too fast? And if you're a long-term investor, you should stick with it because Netflix has had stumbles like this, and so have these other red-hot FANG stocks as well.
Well, again, I want to be sort of case by case about it. In most of these situations, the valuations are so high that it's hard to say that you should be adding to positions on such high valuations, which is why that the most highly valued stocks underperformed this week. It's a bit of catch up. But a lot has to come out with what they say specifically. Can they sustain the earnings growth? Can they sustain the revenue that people are expecting? There's a huge premium placed on their revenue stability, and anything that disrupts that would alter the bullish case. If not, it's probably a blip.
Well, one of the hottest spots of the market this year, cloud stocks, they've been falling back to earth this week a bit as well. Josh Lipton with the details. Josh.
So, Sarah, that's right. It is a hot trade that's losing some steam here. Check out the CLOU. That is the ETF that tracks those cloud names and is down about 6% this week, on track for its worst week since mid-March and set to snap a 4-week winning streak. Among the hardest hit cloud names this week, Salesforce, Amazon, Box, Dropbox, Adobe, and DocuSign. Now, granted, this comes after a big run with this ETF still up about 75% from its March lows. But ahead of this earnings season, some investors seem to be betting that it's a smart time to book some profit here, guys. Back to you.